Hello and welcome to The Bottom Line on TVP World. This is where we unpack the main business and economic stories of the day. I'm your host, Marie Cato. June 11th today has felt like an extension of the Polish presidential elections, where less than a fortnight ago, Poles chose an opposition politician as the next head of state. Today, Prime Minister Donald Tusk asked the Polish government for a vote of confidence and got it less than 40 minutes ago. Tusk has been praising his government policies all day, but a question lingers. How has it done on the economic front over the last year and a half? Jan Kennedy tells us more.
Members of the ruling coalition had reasons to celebrate after Prime Minister Donald Tusk secured a victory in a confidence vote, which was called following the presidential election won by the opposition-backed candidate. Ahead of the vote, Prime Minister Tusk addressed the parliament, defending his 18-month tenure.
This year and a half of government has been one big yes for development. Poland is becoming a very important investment player again. It is not a coincidence. Do you remember the cover of The Economist showing Poland as the most impressive country in Europe in terms of development?
While Poland may indeed be on its way to becoming a key investment destination amidst the government's deregulation drive, its investment to GDP ratio tells a more cautious story. At below 17%, Poland lags not only behind its Central and Eastern European peers, but also behind much of the EU. And experts say a significant amount of work lies ahead.
There are multiple projects nowadays undertaken to smoothen this up, to change this a bit, but the results of those things need to come. Stopping the clock, as somebody's name calling this, or meaning delaying, buying time to revert certain things. It's not sufficient to businesses to believe that something is going to change permanently.
During the debate in Parliament, opposition politicians were quick to point out the fiscal pressure facing the government.
Poland has the fastest growing debt in the European Union. Last year, the debt increased by 75 billion euro. In the first quarter of this year, by 26 billion. And that's only the state treasury debt.
The government's response to such accusations is the ongoing massive drive to modernize the armed forces and the necessity to clean up public finances after its predecessors. However, the country's deficit may reach 6.3% of GDP this year, and not much less in 2026. The open question is it sustainable?
If the government is able to convince investors that it's still a stable political environment despite the outcome of the presidential election, and the economy will keep growing, those global investors may be still willing to buy Polish government bonds.
But the political calculus changed after the elections, spoiling the government's plans of having its ally in the president's chair. And the new head of state, Karol Nawrocki, is likely to hamper the government's ambitious plans.
The risks for fiscal policy are highly asymmetric, because I think the new president will block any government attempt to consolidate public finances. At least there is high probability of that, while I think he is very unlikely to block any legislation which will be good for taxpayers.
Today, the government received a second chance. Now is the time to prove this was the right call.
Poland's economic reports, figures and forecasts might be broadly reassuring, especially against the backdrop of how other EU member states are doing. But it's not about comparing yourself with someone who is worse off than you. Poland is faced with more complex domestic issues that need to be challenged for what they really are. Let's take a look at what the government is saying versus what is really going on in the economy. So today I'm joined by Piotr Maszyk, head of the Macroeconomics and Public Economics Unit at the Warsaw School of Economics. Hello, and thank you very much for joining us.
Okay, hello everybody, all of the viewers of this extremely interesting program. I'm really happy to be here with you. Although I don't know if I can clear all of the questions you've asked about Polish economy and the Prime Minister.
Well, I'm sure we can get through some of them at least. Thank you for being with us.
Yes, okay. It's a privilege.
So let's get started. So Donald Tusk may have received the vote of confidence he was hoping for, but the address to Parliament today has been an opportunity to examine the coalition government's achievements. And I wanted to begin by asking you what you think are the government's successes so far.
It's really hard to say, name any, because even during today's speech of our Prime Minister, he named only those who are closely connected to either the social security or the increase of salaries of given groups, like mine, for example, because I'm part of the education sector, which got quite impressive increase of salaries by 30% last year. But frankly speaking, I could not find any sentence connected to any plan which will change the path of Polish economy in next short, medium, and long period.
So are you saying basically that he didn't say anything concrete in terms of what has been achieved in the last 18 months or is in the works so far?
Either nothing. Okay, so when we are talking about economy, Polish economy, we can of course divide into pure economy, economic relation, and these social spheres. And in case of this social part, Prime Minister said a lot. And it's obvious because this speech was some kind of a new opening after the presidential election when majority of the society gave, people discuss whether it was a yellow or red card to the current coalition due to the fact that they didn't have, and I think they don't have the impression that they are better off right now.
I want to get to that. I want to get to that in a little bit about how people are actually feeling in terms of how well off they are, perhaps aren't. But now that we know that you don't necessarily feel that much has been achieved, I wanted to go to the next part of my question, which is that behind some of the broad stroke numbers, which look reassuring, like 4% GDP growth still seems possible. We're looking at low unemployment, growing levels of consumption, highest economic growth in the EU. There are some more nuanced issues that affect Poland's manufacturing and agricultural industries. And I was wondering whether you could shed some light on those issues.
All right. So in Poland, we've got such expression that if the glass is not fully with water, some people see that it is fully full. Half full, and some seems that feel that it's half empty. And depend on what kind of way of seeing the reality you manifest, we can describe the picture of Polish economy as a soaring eagle of European Union or global economy, and there are arguments that confirm this picture. I don't want to talk about it because when Polish people, Polish economists say something like that, it seems a little bit like people, saying warm words about Polish economy because they want to somehow convince people that it's better off than in real. But it's a common view in Central and Eastern Europe that the second decade of 21st century was something which people called the Polish economic miracle, like so-called Wirtschaftswunder in Germany during 50s, last century. So the growth rate was stable, was high, much higher than the average in European Union. After the year 2015, the unemployment rate decreased to the almost lowest, or the lowest during some years, lowest level in European Union. Of course, the inflation was our problem after the pandemic, because of the pandemic, because of the destabilization of the commodities market made by Russia. But currently, we are closer and closer to the inflation goal. So we can say that based on those data, and I would like to strongly emphasize that it was the good job made by three governments, actually. The first Platforma Obywatelska government in the first half of the year 2010-2015. Then the PiS government did a great job again, and now nothing really wrong happened. So based on that, we can say that Poland is, as I said, one of the best economies in European Union, and probably our viewers know those covers of The Economist, for example.
Indeed, yes.
Where Poland, it's like we
so
are.
So it's like team effort, multi-tiered team
right.
efforts. Absolutely.
Yes, that's right.
I wanted to go ahead.
What does it mean? Well, okay, let me one more sentence. But what does it mean that current government did nothing wrong during those 1.5 years, but did nothing good for the economy as well? That's why I said that we've heard nothing special for next year, except we are doing good and let's keep it, which is a good strategy in short run, but it is really, really bad strategy in medium and longer run. And unemployment, for example, is a good point to distinguish between short and long run, because in short run, due to demography, Polish demography, we've got the lowest or almost the lowest unemployment rate in European Union. But samely, in 20 years, the number of Polish people working decreased by, depends on the forecast, but it could be less by even 10 million people. And I would like to hear from our Prime Minister what the government is going to do about that.
Absolutely.
And of course, you cannot change the demographic trends, because it's impossible to force people to have children if they don't want to.
Absolutely. I think there is a moving trend to rely on AI and robotics. And less
to give you the example how difficult is the situation, you can say that same with almost the lowest unemployment in European Union, we've got next to Spain, I believe, the lowest fertility rate in
Absolutely.
European Union.
That is true.
Much below 2.1, which is to keep the number of people. We are really fast moving as Poland towards Southeast Asian countries like Taiwan, like South Korea, with fertility rate below 1.
Absolutely.
And I would like to hear from the Prime Minister what is going
what
to
measures
do
might be taken to address
about
those.
migration. And what we've heard, no migration at all. We've issued less visas than PiS government, and that's all? That's the whole strategy?
Yes,
that's why
very
I
good
said
points
that we
indeed.
heard nothing about the medium and long-run problems. Secondly, the low number of innovation in Polish economy.
Well, I just wanted to, I'm going to have to interrupt you there because we have limited time, and I would really like to hear your opinion on the matter of investments, because this is something that the current government has been working hard to drum up in Poland, and this investment from abroad into Poland. It's been viewed as the next big chapter for Poland's economy. And I wanted us to just go to a soundbite from Donald Tusk's speech from this morning. Let's go to that now.
This year and a half of government has been one big yes for development. Poland is becoming a very important investment player again. It is not a coincidence. Do you remember the cover of The Economist showing Poland as the most impressive country in Europe in terms of development?
And now we're just going to take a look at this it's becoming famous, this cover of The Economist that presents Poland as this economic miracle. But the reality is that the investment to GDP ratio in Poland is actually lower than in Bulgaria, and that is actually classified as subpar. So my question is, how is that investment going? How effective are the government's efforts? And really, is Poland as attractive a destination for investment as the government is making it out to be?
Probably from the point of view of foreign direct investors, foreign direct investment, probably yes, but we cannot rely on foreign capital in our development, in the growth. And before we started our conversation, you named a key figure that negatively influenced the investment to GDP ratio, which is the deficit of public finance. You cannot increase the investment without savings. That's a pure microeconomics. I got today the exam of my first year baccalaureate students, and it's like ABC for them. If you
let's just bring up a visual with the levels of investment in Poland, just for our viewers. If you could just bring up that visual.
Okay, yeah. So without savings, not only household savings or enterprise sector savings, but without in whole economy savings, you cannot achieve the high level of investment. The key element of so-called Asian tigers, or Southeast Asian economies, was high investment to GDP ratio, but samely high savings ratio. In Poland, with such huge budget deficit, the public finance deficit, it won't be possible just like that. And what we've heard, that we are thinking, we are talking, and probably it would be one of the first new laws issued by the government, because President-elect said that he would sign this law immediately, increasing of the tax-free income to 60,000 zlotys, which will increase the deficit in public finance. It won't be possible just like that. We need a consolidation in public finance, but as you mentioned, it won't be possible because government today, with this speech by Prime Minister Tusk, started to think about next parliamentary election, and the President-elect Nawrocki won't sign a law which will lower the spendings of government or increase taxes. So this is the problem of the government, and I've heard nothing about that, how to solve this problem. And without that, it won't be possible to increase the investment to GDP ratio.
And so, were you surprised by the outcome of the vote? Just very briefly.
Okay, no, not at all.
Not at all.
Not
okay.
At all.
Okay.
Come on. It was obvious that those people will keep the government, because it's impossible to create another government with another prime minister within this coalition, and those people want to stay in parliament for next 2.5 years.
Okay, Piotr Maszyk, it's been great speaking to you. Head of the Macroeconomics and Public Economics Unit at the Warsaw School of Economics. A pleasure speaking to you. Thank you for your time.
Thank you. Thank you very much.
And that concludes The Bottom Line for today. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.